Welcome back to the channel, everyone. Today I want to talk about not only how Bill Hwang has just started snitching on the shorts, but also how the DOJ has just filed some new criminal charges against individual employees. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, AMC Ape just tweeted saying our boy Bill Hwang has just started snitching. Let's go. It was just seen on the news that Bill Hwang is now asking for a probe of Morgan Stanley over a recent short squeeze. Bloomberg UK was then quick to release an article on how Bill Hwang is seeking a probe of Morgan Stanley in a costly short squeeze. Now interestingly, Archegos was actually on the flip side of this short squeeze and lost big after asking Powell and Passy for help with his wager. The firm has asked authorities to review the bank's actions that resulted in Archegos being squeezed out of one of their short positions. It says before Bill Hwang sent a slate of stocks on a manic climb last year, he had already started bleeding billions of dollars on a bearish bet after seeking Morgan Stanley's help. Bill Hwang then asked for Morgan Stanley's help to obviously short the stock further. Maybe Bill Hwang was asking Morgan Stanley to help him create some synthetic shares. Morgan Stanley obviously didn't oblige and didn't help him out, and instead they ended up investing into Fubo and ended up short squeezing him. He's obviously a bit salty about being squeezed and about bleeding billions of dollars, and therefore he wants the DOJ to investigate Morgan Stanley and investigate how Morgan Stanley helped those short sellers. It's an untold chapter that played out just before Hwang's famously bullish trades came tumbling down in early 2021, wiping out Archegos Capital Management and leading to criminal charges. Months before all of that, Archegos was actually trying to exit a wager against a Chinese online broker, Futu, the owner of Moomoo, and sought help from Powell and Passy, the Morgan Stanley banker facing close scrutiny in a US probe of whether Wall Street is too loose-lipped when handling big trades. It says Hwang placed a massive short bet on Futu Holdings using swaps and wanted to close out his position around the end of 2020. He told Morgan Stanley he needed to buy a large block of shares to unwind the position, according to people with knowledge of the episode. But before Hwang managed to defuse the bet, Futu's price skyrocketed, gaining more than 400% in the 2 weeks after that Christmas. That jump took an almost $4 billion bite out of Hwang's portfolio. It said Archegos has sought a review of whether someone at the bank might have tipped off outsiders to its plan to buy Futu stock in bulk. It says indeed it remains unclear who exactly squeezed Hwang's short bet and whether they even know they were targeting him. Futu's price surged coincidentally with last year's so-called meme stock frenzy, in which an army of retail traders organised themselves on message boards and set out to identify and lift shares targeted by short sellers. Interestingly, it says it's not clear when Archegos began setting up its bet against Futu or how it exactly structured the trade. The firm often favoured the use of swaps, but its $4 billion hit from the trade is startling, a figure that almost equated the entire total market capitalisation of Futu in late 2020. Therefore, Bill Hwang on his own was shorting the entire float of Futu, which obviously backfired on him. And it says that speaks to the dangers of short selling. An investor who buys a stock is limited in how much they might lose, the value of that stake. But an investor who shorts a stock, especially with leverage, can lose multiples of what they paid to set up the trade if the price climbs dramatically. And I think that's really important and really interesting because Bill Hwang was basically shorting the entire float of Futu, but obviously because he was shorting them via the use of swaps, he never had to report his position whatsoever. Therefore, he was flying completely under the radar, shorting $4 billion worth of Futu and ended up losing it all. Guys, if you haven't already, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. With BlockFi, you can invest in tons and tons of different cryptocurrencies like Sand, Mana or Decentraland, Link, Matic, and many others. BlockFi is a platform that's super easy to use. It's also a free platform and requires no minimum balance, and that's why over 500,000 people trust and invest with BlockFi. They also offer a BlockFi Rewards credit card with an introductory rate of 3.5% cashback on all of your purchases, also paid in crypto. I think overall this is really good and a brilliant move in the right direction for market transparency and for these shorts being burnt and tied up in Department of Justice investigations. Obviously, Bill Hwang is very salty, not just about being squeezed in his Futu position, but also about the entire of Archegos being liquidated and going bankrupt. And he's now actually starting to help the Department of Justice perform investigations into funds or firms like Morgan Stanley and into short sellers. I don't think it will be long until Bill Hwang starts turning on other institutional hedge fund managers such as Griffin and many others. And also the SEC tweeted saying, today we charged Allianz Global Investors US LEC and 3 former portfolio managers with a fraudulent scheme that led pension funds for teachers, clergy, engineers and other Americans to lose billions of dollars. Allianz has agreed to pay billions of dollars as part of an integrated global resolution, including more than $1 billion to settle SEC charges, and together with its parent, Allianz SE, over $5 billion in restitution to those victims. Now, I think this is absolutely brilliant. You may say, Tom, the SEC won't do anything for AMC because it's only retail investors that have been investing into AMC. Nobody else owns the float other than those retail investors. But I think it's also very important to remember that actually now there's a number of pension schemes like the Californian pension scheme and many others that have now invested into AMC over the last year. Many of these pension schemes were buying hundreds of thousands of AMC shares up in the $50, $60 and $70 regions and therefore are obviously down significantly on their investments. And therefore the SEC is now more likely to charge Citadel and other shorts with these fraudulent schemes now that pension funds are actually involved and obviously regular Americans are losing their money by investing into AMC. Dave Lauer also tweeted saying, wow, this is quite the case announced by the SEC. This is what enforcement should look like. Allianz has been fined and they're now banned from providing financial advice for 10 years. On top of that, individuals have also been banned from the industry and the Department of Justice has filed criminal charges. And he said also noteworthy is how quickly this case has come together. Losses to pension plans happened during the 2020 pandemic and market volatility, and within 2 years the actions have been taken and charges filed and pled to. Allianz defrauded pension plans and other investors and they're now paying the price. And obviously, in the case of AMC, not only is Citadel defrauding retail investors, but they're also defrauding these pension plans that have been investing into AMC over the last year in the $50, $60 and $70 regions. I also think it's good because not only have these portfolio managers been fined and banned, but also the Department of Justice has actually filed criminal charges. Not just a small $50,000 fine and a 1-year ban, but actually these people may genuinely end up going to jail. And now something I found very interesting is this confirmation from Peter Han. Cash Cow tweeted saying, hey Peter, I know this has been a bit of a trust me bro idea that's been floating around for a while, but is it possible that Citadel has transferred their short position onto Melvin? Peter replied saying, I think it's very likely in some fashion. Obviously, this is something that has been spoken about for a long time, that Citadel and a number of other hedge funds have offloaded their short positions into Melvin Capital, being the sacrificial lamb. Now you may say, Tom, who's Peter Han and how can we somewhat trust what he says? Obviously, I've spoken about Peter Han a number of times on the channel over the last year. Peter Han is a current fixed income portfolio manager and has previously held a number of high-level positions at Scotiabank, Western Union and many others. Peter Han has obviously been around since the start or since June and July time and obviously clearly knows his stuff in the industry and knows that positions are possible to transfer to other funds. Crypto Whale has also tweeted saying the Federal Reserve Chairman, Jerome Powell, has said that there could be some pain involved with taming inflation. I think it's so interesting how Jerome Powell's outlook has changed over the last few weeks. At first he said there was no chance of a recession, then he said he's going to perform this soft landing, then he said that recession is basically somewhat out of his control, and now he thinks there could be some pain involved. It seems to be every single day at the moment that his outlook towards a recession changes, and it seems more and more likely that a recession is absolutely on its way. I found this one quite funny. David said, can somebody explain this in crypto terms? And Kenny said the market is basically going to look like Luna. Speaking of which, Paolo the Parrot has tweeted saying it appears an inside job was allowed to be carried forth to bail out the whales, all while the retail bag holders got incinerated. There could be massive class action lawsuits and criminal proceedings as a result of this. New Money Review posted an article about how Terra operators bailed out crypto whales. The operators of the collapsed Terra stablecoin UST last week allowed select holders of the dollar token to cash out at close to 100 cents on the dollar using cryptocurrency exchanges Gemini and Binance as a conduit. Holders of $2.7 billion in face value of UST were able to sell them for Bitcoin in 2 transactions last week, one with an effective Bitcoin USD exchange rate of $32,000 and the other with an exchange rate of $35,000. These transactions took place on May 9th and early on May 10th when the UST price traded in secondary markets as low as 60 cents in the dollar. But yet these transactions took place at basically Bitcoin's fair value, if not over the price of what Bitcoin was currently trading for. The 2 exchanges are now likely to come under increasing pressure to disclose which cryptocurrency market participants were able to exit their Terra stablecoin positions last Monday and Tuesday at close to par value. Meanwhile, retail holders of Terra and Luna have lost nearly all of their money. It really is criminal, but it's got to the point now where it doesn't even surprise me that some of these hedge fund investors or institutions were allowed to exit their Luna positions or their UST positions for the full price and basically not lose any money whatsoever. These institutions didn't lose a single penny, meanwhile retail investors were losing their entire life savings as the UST coin and Luna coin crashed. But on that note, the New York Supreme Court has actually rejected Tether's petition to block the public from receiving documents detailing the composition of Tether's reserves over the past few years. Tether obviously don't want to tell people where their USD bonds are supposedly held or which institutions supposedly hold the Tether money. Tether actually tried to file a petition to block the public from finding out where that money is held. But fortunately, the New York Supreme Court actually rejected that petition, and now they must release details on where their money is actually held or not held, and if they don't actually have any money. So guys, be sure to leave a comment down below and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.